Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up with the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists have received continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Tuesday, July 6th. I am your host, Jesse Allen. Great to have you here with us. MarketTalkAg.com is our home on the web, MarketTalkAg.com. This is our 225th episode. Hard to believe we got that many down already. But we are here, and we appreciate you joining the family here with us. And again, our website online, you can find all of our links, all of our social media, MarketTalkAg.com. Well, it was a rough day in the grain trade as we come back from a long holiday weekend. Let's talk about it. Let's bring in our good friend Matt Bennett with agmarket.net. Matt, good afternoon to you. And oh man, I don't think there's much you could say about today. That was a rough day of trading from the get-go when we opened things up at 8:30 this morning.
Yeah, there's no question. You know, there's a few folks that were wanting to maybe get some hedging done first thing this morning, and the market was called. If you looked at the bid ask, 20 to 22 or 3 lower, but we didn't open there. We opened like 26 or 8 lower, and we're down limit within 30 seconds. I mean, that's pretty much what we did. We did try to bounce off that a little bit. There were some folks that showed optimism. In the market, though, it just seemed like the way that you were able to kind of gauge the feel of everyone is that beans, we're down 40, and then the next thing you know, a couple hours later, we're down 95 cents, so corn just stayed there. Now, it's interesting because, yes, the weekend maps looked very advantageous for the driest areas of the Corn Belt. This morning's maps, a little less advantageous. And then the noon maps, quite frankly, didn't look near as advantageous. So I'll tell you what, the weather tonight and tomorrow are going to be very closely watched and will be very important because you know and I know, Jesse, if we don't get good rainfall in short order in parts of the Corn Belt, there's folks that are going to basically have that last nail in the coffin, I'm afraid.
Well, and you're exactly right, Matt. And, looking at that northwestern Corn Belt, parts of Iowa, Minnesota, they're really starting to feel the stress there, especially northern Iowa, southwestern Minnesota. You look at the Dakotas, I've talked to producers there, and they're just like, this spring wheat crop's done. It's burned up. I mean, and corded soybeans are starting to be affected as well up there. I mean, looking at this, and obviously – one good rain is not going to fix our problems, but it can at least buy us some time and reduce some of that stress in these areas. But I'm with you. Looking at these weather maps, it's crucial to see exactly what falls and where it falls here in the next 48 to 72 hours, so to speak.
Absolutely. Not to mention watch the temperatures, because if you get an inch of rain, but it's 95 degrees, you just bought yourself 3 days. When you have no subsoil moisture, a person has to understand, you can put a Band-Aid on the crop, but you really need the entire pattern shift to occur. The 6 to 10 and 8 to 14 day by no means shows any relief whatsoever in the longer range forecast for the northwestern Corn Belt. If you look at those, they're both showing dry. And so I guess in the next 6 days, you better get 3 or 4 inches of rain, in those areas, or it's going to be tough. And so, I don't want to be bullish on the other hand, Jesse. I mean, today seemed a bit overdone, quite frankly. Why does it seem overdone? You're looking at very tight stocks levels, both corn and soybeans. We do have a WASDE out here in a couple weeks, or in a week, I guess. And, a person's got to ask themselves, how tight would the situation get? July, we're probably not going to learn a whole lot. We may get a little bit of demand revision, but we're not going to get anything on yield. We know what the acreage is that they're going to plug in. That's automatically going to lower new crop carry. And so do I want to get terribly down on this market? No, but like I said, I want to talk the flip side a little bit. 540 corn. You close down the limit today and you're at 540 D's corn. And again, I know we talked about this before. I hate to sound like a broken record, but what a luxury. What an absolute luxury to have a down the limit day and have 540 corn. People live between you and me. A lot of them have one heck of a crop coming. And north of that line, there's a lot of people in the Eastern Corn Belt that could raise a record crop. Let's just be honest about it. So if you're that person, You got to ask yourself, what kind of risk do you want to take whenever you're already sitting at what I would call extremely profitable prices?
And it's the case of the haves and the have-nots, as you just mentioned there. A lot of those Eastern Corn Belt farmers, they're going to have that crop. It's the Western Corn Belt farmers that have to be a little more strategic, so to speak, in their marketing plan. I talked to a producer last week in Northwest Iowa. He said he's only 5% sold on new crop corn and 10% on beans just because he's too afraid to market too much. And, he's like, I can't afford a margin call if this flips or anything else. So it's really it's just a tale of two different dynamics. And for our growers in that Western Corn Belt, it is pretty tricky in this market environment, which of course is amplified by the computers and everything else that's going on in the trade, Matt.
Yeah, absolutely. When the algorithms take hold, you can't get in the way of that market. It's just going to steamroll you. One time today, we had a pool of about 130,000 contracts or so, of these sell orders. That thing shrunk significantly towards the end of trade. And then a lot of people in that extra 5 minutes took those orders out of there because they got cold feet. I know, because they ended up with only, I think, 1,500, something like that. But the Northwestern Corn Belt, I do not want to miss these folks. I don't know how many people we called or that called me today and said, I'm not getting the rain. I'm super frustrated with this situation. And some of those people have called me before and say, I know you're 50% sold of expected production, but what do you do whenever your expected production right now might be 50 bushel an acre, for corn, let alone soybeans? And so I guess the thing that I would say to a producer like that is I think you're handling it correctly, because the last thing you could afford is to get oversold and then have to buy those bushels back at a higher price. That's the worst thing that could happen to you as a producer. With that being said, there are tools out there. For instance, just simple put options. Last week we got up to 605, and we as a company sold a little bit of corn there. Now, in total transparency, heck, we sold some corn at 405. That was our very first sale. We did cover some of those sales with some calls because we thought there was potential this year. But the reason why I sold 405 corn for my farm last week, which is kind of what we use, for our official recommendations, we have to follow what we say we're doing. 605 corn, to me, even if I didn't get rain in my situation, and my crop maybe wasn't quite as good as what I thought it was going to be, given the fact that I buy crop insurance, I can make 605 corn work whenever it's that much higher than your spring insurance price. You certainly know you've got insured bushels to sell. There's definite tools you can use. And if you're buying crop insurance, by all means, let's use those insured bushels for, in my opinion, what they're supposed to be used for.
Well, and again, overall, with this entire market, Matt, I've had a lot of folks talk to me about this and say, well, the days of the average farmer being able to trade in this market are almost over with all the funds and the computers and everything out there, just making it so volatile and so difficult in the expanded limits. But as you just alluded to, it comes down to a smart marketing plan. You just have to be smart about it and use those tools that are at your feet or at your fingertips to take advantage when the time is right to take advantage in these wild markets, Matt.
Right. And I think what that takes is a very consistent, steady look at what your profit margins are. I advocate a person looking at least a couple, 3 times a week. And quite frankly, and in markets like this for sure, but quite frankly, a lot of my producers look every day. How are my profit margins affected? It's fun whenever we're going up. That's all there's to it. And so, the interesting thing is that our break evens for a lot of folks this year, of course, were sub $4 going into this growing season. And that was using just, hey, well, this is something I normally pay myself. These are the normal cost factors I'm looking at. And so what we've done with a lot of people, and I think what you should do as a producer, if you get to where your profit margins are so grossly above your break even, build in a little more income for yourself to where you can shore up your liquidity, or you can get the farm healthier. Your cost of living expense per acre might go up to $300 or $400 an acre. Hey, you know what? If your break even still $5 corn and you're above that, you're still sitting in a really good situation. This market is offering us so many opportunities to get our farms healthier, and we really need to be paying very close attention. But as you suggested, we've got to pay attention to profit margins. Look at these things, like I said, very consistently.
Well, overall, Matt, I think we summarized the grain markets today. It was just a rough day, but staying disciplined and focusing on those targets, that's going to be a big key moving forward. And I'm with you again, looking at that weather situation. Very interested to see what happens here tonight, tomorrow. Just looking at that forecast map, I'm still skeptical, like you alluded to, with some folks saying we're not getting the rain. I'm still skeptical, and I've seen pictures of a good-looking crop, and I've driven around and I've seen good crops throughout parts of Iowa, southeast Minnesota, Wisconsin as well last weekend. But again, time is running out, as you well know, Matt.
Yeah, interestingly, this morning, Jesse, I talked to a grower in North Dakota who said he hoped it didn't go ahead and rain anymore because it'd make his job easier this fall. He's that close to pretty much being done. He said that he wouldn't have to get the combine out if it didn't rain anymore. They're probably going to end up disking it down. I know that that's not everyone, but that's a tough situation. So we're certainly hoping that those folks get the rain that they need to shore that crop up. But let's be honest about it. I think some of those crops are already hurting enough that they're not going to make 200 bushel corn. It's just going to be a rough go for some of those producers. So I certainly wish them well.
Matt, I definitely agree with you on that. Let's look over livestock. It was a decent day there today. Not surprising considering the huge drop in grains. Cattle future, especially that feeder market, saw a good, strong day there today. And I know we were kind of looking for some direction coming out of the 4th of July holiday. What are your thoughts in cattle here as we start the week?
Yeah, I mean, big weekend for demand. We kind of know that's always going to be the case. A lot of folks out grilling. Demand for beef has been strong, but you go ahead and you look farther out and you see 136, 139 on the board, and you're getting some of those levels. I think you and I talked about maybe a couple of months ago. I felt like we would see some really good cattle prices moving on out. Today, as you suggested, makes a heck of a lot of sense to see feeders higher whenever your feed costs are down as much as what they are. And let's face it, some of these guys they've stepped out on a limb, take a leap of faith buying some of these feeders. And so I think that they're kind of hopeful maybe that this current trend will continue. If I'm a feeder, though, I also have to be very realistic in knowing this crop is a long ways from being in the bin, and use some of the dips in the market maybe to give myself an opportunity to lock some ratios in, because your ratio, I'll tell you what, it really came your way on a day like Tuesday. And anytime you see that ratio really work in your benefit, as far as what are the price of my feeders versus the cost to get them there, pay very close attention.
And on the hog side, this market, we've seen a lot of premium taken out of this market the last month. We're still kind of hovering around that $100 level. I know the deferred months are a little lower. That July contract, that spread between that and the August is starting to kind of widen a little bit. We're back up around 110 in July. But just looking at hogs overall, I know we're trying to find some more direction here. What are your thoughts on the hog market?
I'm still of the opinion that the hog market's probably a touch rich without a lot of demand, I guess, to shore us up. I'm not super friendly hogs. I don't want to be too negative, but let's be honest. I think you and I both on the way up when we looked at 102 and 109, we're saying that we were getting a little overcooked, So I know whenever you've come from 115, 120, you're thinking, gee whiz, when are we going to get back up there? Well, let's just be realistic here. These are price levels we haven't seen other than the last few weeks for quite a long time. And I don't know that you're going to stay above $100 on all these contracts. I think we're probably going to dip down below. And then a lot of it's going to be a function of Chinese demand. If they come in and they buy a bunch of our pork, there's no question it'll shore us up. But as of right now, I'm not too bullish as far as pork prices are concerned.
Well, overall, Matt, we've covered quite a bit in a short amount of time. I know it's a busy day. Any other final thoughts you have for us or anything you want to reiterate here today?
Yeah, again, I just think that a producer's got to keep their perspective, stay disciplined. You know what? You are looking at a very profitable price and situation. Everyone this year, if you bought crop insurance and you're in a situation where you've adequately managed some risk, it's going to be a fantastic year. Don't get disillusioned by the fact we're $1 off the highs in the corn market. Let's not beat ourselves up over something we don't need to beat ourselves up over.
Well, I know, Matt, if producers need some help and need some advice for their marketing plan, you and the team at agmarket.net have a lot of great resources and knowledge, and it's as simple as checking out the website, checking out the app, or giving you guys a phone call, isn't it?
Absolutely. Agmarket.net or agmarket.app, all kinds of tools there, contact info and research.
Matt, appreciate the time as always. Again, I know it's a busy day. Thanks for joining us, and we'll talk again soon.
Absolutely, bud. Thanks for having me.
Matt Bennett with agmarket.net, our guest today here on Market Talk, brought to you by Growmark FS. Find us online, markettalkag.com. This has been the Tuesday, July 6th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.